let's now address another set. We've got Rajesh Sharma, MD at Capri Global Capital, joining it in the show right now. Rajesh, what excellent numbers. NII uptick of 41.5%. Profits are the highest ever quarterly numbers in terms of PAT that you've posted. And, you know, the disbursements, NIMs, everything seems to be pretty much on control. What everyone's talking about is that you do co-lending for MSME, for gold loan, for housing loan, now car loans as well. How is it that you differentiate your company from others in terms of, you know, balance sheet risk, given so many exposures and verticals that you cater to? And especially at a time when we're seeing some asset quality stress in the entire NBFC sector.
Yeah, thank you. Good morning. So I would say that first of all, that we are only in the secured portfolio where every portfolio is collateralized either by real estate or the gold. So, and plus last 2 years we invested heavily on the technology and building data science capabilities, building scorecards, managing the risk accordingly, and continuously reducing the dependence on the human and focusing more on how data-driven decisioning can be done. And I think that is one region where our asset quality is remaining very robust. And second, if you've seen our cost efficiency have improved, that is a result of our technology initiative, which we across the last 2 years we spent heavily on that. So that now with the growth of AUM, operating leverage have also started coming in, and then you will see next 2-3 quarters that every quarter on quarter our cost to income ratio will go down. So overall, it's a very good quarter indeed.
So if the industry is going through a stress, why is that you are not going through stress? We just had Mr. Vedanathan. He's taken a huge write-off in this MFI book. We had IndusInd Bank a couple of days ago. So everyone is in a sense worried about the lower end of the pyramid, which is where you specialize, which is where you are giving loans.
Yeah, so I think MFI is a completely unsecured portfolio where the sector has seen that one person is borrowed more than 4, 6, 8 types of loans and they are not able to get further credit, and that is where I think the delinquency is rising. As compared to that, first of all, we are very well diversified. We are into secured MSME, gold loan, micro lab, affordable housing, and smaller ticket size construction finance. So because of this diversification, along with our gold loan, which is now almost about 7,000 crore, including co-lending, where gold prices on the rise and asset quality remain in control, yields are better. So overall, these diversification across product and our tight control on asset quality, especially in MSME portfolio also, while we are seeing relatively there's some delinquency rising. But we have been very focused on the collection. Last 2 years, we spent how to focus on the collection is a very man vertical. So keeping a tight control, all these we are able to maintain. Still, the demand is very good. So we are quite optimistic about it.
8%, 8.7% NIMs despite not taking risk, because NIMs is a function of where you are lending and to whom you are lending, right? 8% plus is very impressive, but can you manage it without taking risk and maintaining your book quality?
I would say that if we do not dilute our origination underwriting standard, we can. And we are driving growth from adding the more and more product. If you see last 3 years, we added gold loan, we added micro lab. On distribution side, we added the car loan, we added the insurance vertical, and now we are adding the rooftop solar. So every 6 months, we devise some or other product which falls in our philosophy to lend those customers who banks is not lending. With that diversification in place, I think we can continue to grow at the pace of 30%. And of course, growth is not the focus. Focus is growing while maintaining the asset quality. So we are quite confident that next 3-4 years, the kind of geography and the verticals we operate in, that much scope exists for us. And still we are only 20,000 crore book to reach a 50,000 crore book in next 3 to 4 years, which we are aiming. And I'm sure that in a kind of opportunity India is offering, still reaching 50,000 crore is not that great target.
Just hear you say lending for solar rooftops as well?
Yes. So we have recently started because we've seen that there's a very big focus on the subsidy where 75% subsidies to the user is given and to build the rooftop solar. So there a lot of demand is there. We have launched that product. And next year we'll see that we'll be able to build a portfolio around 4 to 500 crore rupees in that. We are building that capabilities and distribution and network in that. And it's a good demand there because as we all know this Pradhan Mantri Surya Ghar Yojana where 75% subsidies the customer get. And entire his housing demand up to 300 units are self-financed by setting up the rooftop solar. So I think this is the sector where we are able to build a good portfolio, and the security is very good because if they don't pay, uh, you can take away the rooftop solar, and plus to the customer it is not a cost because they are saving that much amount by using rooftop solar in lieu of paying to the known rooftop solar electricity bills.
The other thing Rajesh wanted to figure out, as if now what your lending mix is, it's really construction, which is the largest chunk, right? Almost touching 65%. Then comes housing. Of course, there's gold loan also, which is pretty high there. And so are and then of course comes MSMEs as last. How do you see your lending mix change? And do you sense that gold and construction will continue to be the largest of the pie?
So biggest is the gold, then followed by MSME, then affordable housing, and then construction finance. So construction finance is the smallest portion all of these four products. So gold is about 7,000 crore, including co-lending. The MSME is about 5,000 crore rupees. Affordable housing about 4,200 crore rupees, and construction finance about 3,700 crore rupees. Micro lab is recently started. It is just about 300 crore rupees. Next year we hope to reach about 800 crore rupees in that. So among the all lot, construction finance ranked the fourth place in the AUM basis. And going forward, the mix is going to remain more or less like this. We are not going to exceed construction finance more than 20%. Gold is likely to remain about 35%. Another 15 to 20% will be MSME, and 15 to 20% will remain our affordable housing.
Now you can, if your aim is to go from 20,000 to 50,000, there are two ways you can grow. One, you take a lot of capital from banks or perhaps from the debt market. Or second, you raise fresh tier 1 capital via the equity market. What would be your plan to get the adequate capital requirement so that you can grow?
So our capital requirement currently is about 22.9% capital adequacy. But going forward, our focus will be that our co-lending AUM is about 18%. Keep it that level. So about 20% co-lending if we do, that conserve the capital. And some point of time in next 6 months, we intend to raise capital, tier 1 capital from the market. And that will enhance our capital adequacy ratio for meeting our requirement for next 3 to 5 years.
Do you expect some changes coming from RBI, because NBFCs in a sense now are raising not one hand but both the hands, saying that look, it's getting difficult, the environment is tight, and if it remains like this, it's a problem?
So I think RBI having all the data, and they are also looking at all the data carefully. NBFC sector remains very critical key in reaching to the last mile customer to meet their demand of the credit. And if you talk about MSME piece and affordable housing, they continue to remain the key economic growth driver. I think Government of India is also having focus. Now Pradhan Mantri Awas Yojana has again been relaunched. So it shows that the government and NHB is very focused to grow that segment. So I believe that whatever the sector is facing a little difficulty in getting the limit from bank, because their sector exposure is also now reaching at the peak level, at the maximum permissible limit. Some guidance in case comes that will ease the not only availability of the fund but also the cost of the fund, and that ultimately is going to help to meet the requirement the small borrower to meet their growth plans.
Let's spell out some numbers here, because that's what your shareholders would like. Because you had guided for a 30% plus growth in your AUMs by FY27 and 15% ROE over the medium term. Given the current environment, how confident are you of achieving these numbers?
So if you look at our ROE this quarter is almost about 12.5%, and we have seen considerable slide in our cost to income ratio. Going forward, that cost to income ratio will keep coming down. So we are very much on that track. As you know, we are close to 20,600, and this year we should close about 22,000 crore rupees. Next 3 years to reach a AUM of about 50,000 crore, 30% growth is required. So demand is there. For us, our liability franchise remains very, very robust and strong. So getting the liabilities from the bank and the market will not be a challenge. And third thing is requires a capital adequacy, for which some point of time we raise the Tier 1 capital. So keeping demand in place, our capability in place, and capital adequacy and liability franchise, I think mix of that, there should not be any difficulty. Now, from going from 12.5% ROE to 15% ROE next 2 years, it is very much possible, and we are confident that we will be there.
So just to wrap it up with one final question, your AUM year on year is up 50%. What happened in last quarter that it is looking 50% higher? Because if you are saying that you will reach a 50,000 crore loan book in 3 years, that means in coming quarters, the growth will not be 50. I mean, I'm just putting maths here.
So year on year basis, we are growing 50%. Quarter on quarter, we are growing at the pace of about 10%. So last quarter on quarter, we have grown about 8%. If you talk about year on year, we have grown about 54%. So yearly basis will continue to grow in that range. So this year, last year was about 15,000 crore. This year we'll close about 22,000 crore. That is how it is.
Maintain that year on year base also, Mr. Sharma. That means by next year, and if not next year, in 18 months, you should cross 50,000 or 45,000.
I will still be conservative to do better than what we say. So we're keeping internal target to give the guidance that we'll reach 50,000 crore from 3 years from now. And let us hope if everything goes well, we might be achieve that much before than that.
I appreciate your time. So glad you could join us.
Thank you.
If you like this video, then like, share and subscribe to ET Now.